Hey friends, Lucian here with the Bullish Bears team. I wanted to make this video on financial advisors and some of the scams or kind of shady practices that you'll see out there in the industry. Again, this is no hate or shade on financial advisors. We find them to be very useful if you find the right financial advisor. And the most important question that you could ask your financial advisor when you're hunting around for one, or even if you have a current financial advisor, is ask them, can they read this chart, right? Do they know stock charts? This may sound like a silly question or a simple, silly question to ask your financial advisor. But what you'll find is most financial advisors, or a lot of them that are out there, don't know how to read a chart like this. Now, some of the higher end ones, or maybe wealth management funds, they should probably know how to read these charts. But again, you may be surprised. But a lot of the bigger brokers that you might call, or ones that manage your 401k account with your job, they don't know how to read charts like this. And this is a very big problem. Again, with experience, I've had experience with a major broker who I won't say where, in the past, I'd ask, when a market was at a top, when you see levels like this, here's peak levels, going back to, let's say, 2000, 2008, right? So you had the dotcom bubble back in 2000, you had the 2008 financial crisis. And as I'm making this video here, you'll see, a huge drop here due to the coronavirus, right? So when markets are at all-time levels like this, depending on your age group and bracket, you got to be very careful when you're at a top, being risky. And what you'll find is a lot of these times when you call your broker, especially ones with, through your job, or if you get a rep on the phone, they don't like when you call and make changes. And I've had this experience happen again to me with a major broker, again, I won't say who, where a market was at a top, and I didn't want to be risky. So I just called them and I said, hey, listen, I just want to move my funds from risky to safe for a bit, or even cash, right? If you say you want to go cash for a short period of time, they do not like that. Now, again, this is part of the industry. I don't fault financial advisors. They got to make money too. So there's certain percentages or, management fees, things that they make when your money's invested, right? So when your account's with them, they make fees. And again, they should make money because they're investing, right? They're investing your account. So they should get percentages and fees like that. But when you say the word like cash, they don't like that. Again, I'm not saying to go cash, but there's times, when a market's at an all-time high and looking that, very overextended, you might want to be cash for a very short period of time, right? Because you want to buy low, sell high, or being, in other types of funds. Again, I'm not a financial advisor. There's other things you can make money, other funds you can be in when the market drops or it's at all-time highs, right? So I'm not saying to go cash, but I'm just saying when you ask your financial advisor and you talk to them, when you go to do things like that, they don't seem to like that very much. And that's what happened to me a couple times when I was at all-time highs, the market, and I was like, hey, can you just switch me over to cash really, just for a short period of time? They actually threatened to cancel my account, and I'm just like, why would they cancel my account with them? I'm protecting myself. And sure enough, if, I was right, because as a stock trader, I can understand charts, so I can see when markets are overextended at times and are looking to either pull back some or drastically drop, so I was right when that happened. And guess what? If I had listened to them or their threats, because they'd say, sir, you're really supposed to be in it for the long term and stuff like that. And I would say, well, yeah, of course, I understand that. I'm not looking to go cash or safe for a long period of time. I just want to wait for, again, when a market, let's say, is way up over here, I want to wait for it to bounce and show reversal patterns before I'd go risky again. And they just, again, they didn't like it. They threatened to cancel my account a lot. And that, a couple times. That happened at least twice. And then actually a third time with the same broker, I explained my frustrating experience with them. And they gave me the whole, sir, we're sorry, we apologize, . And then the rep kind of went back into the whole process again of trying to sell me in it that I'm going to be in it for the long term. And I say to myself, this is like, it's a very big problem because, just say right up here, when the market's at a peak like this, right? Let's just say I had $100,000 in my account, right? So if I had $100,000 in my IRA, we're just using the SPY as an example right now. This kind of just tracks the overall market, right? So when the SPY dropped from 340 all the way down to $220, that's over a 30% drop. So if I'm in the the bracket with my age requirements, that's putting me, again, I'm in my 40s, right? So they would put me in risky or aggressive funds. If someone was managing my account and didn't put me into safer funds or cash or something for this period of time before the market dropped, I take, let's say, a 30% hit. So if I have 100,000 in my account and I take a 30% drop, that's a $30,000 drop, right? Now, these reps on the phone or these, financial advisors, again, no hate or shade on financial advisors, but a problem is I get a little frustrated at times with them because they sound like car salesmen a lot, because a lot of times when the market will drop like this, they'll give you the answer, right? Don't worry, it'll go back up again, right? This happens, it's part of the stock market. But the problem is when? When will the market, let's say in this drop right here with the coronavirus, when will it get back up to here again? Is it going to happen in days, weeks, months, or years? If you go historically, how about the people back in the dotcom bubble, right? Where the market dropped from, just say $153 on the SPY. Again, we're just using this as an example. It took them all the way to 2000, basically, 6 to 8, right in here to just get back up to even again, right? And to actually profit, it took those people in 2000, all the way back into like 2012 before they actually started like getting above those levels again. So I bring that to your attention because it's very important. If your stock or your financial advisor doesn't know how to read charts like this and they say, don't worry to go back up again, it's a matter of when, right? If you were in cash up here, right, before it dropped, you don't take the drop. So then when you start to go risky or you're buying back in again, let's say you had your $100,000 and you were in cash. I'm just saying as an example, I'm not saying to go cash, but let's say for a period of time, for a month or two or whatever, for a short period of time, cash would benefit you. Or if you were in a different fund where, the market, where you're making money in your account as the market drops, right? Again, check with your financial advisor. But cash or so, let's say, for instance, would benefit you. Cash wouldn't necessarily benefit your advisor, right? Is there certain fees that they don't make during those periods of time? Are they worried about you leaving and going to another advisor? Those are questions that are very important to ask. And it's something that's caused me a lot of frustration. And I want to get that out to people because stock charts and knowing how to read these charts is extremely important. And you would be shocked to realize how many financial advisors can't read a chart like this. And if they can't read a chart like this and they just put algorithms into a computer based upon formulas in your age, then you could get stuck getting these drops like here, in 2020 with the coronavirus, back in 2008 with the financial crisis and the dot-com bubble. Now, some people or, financial advisors would say, oh, you couldn't see those things coming. And that's why I say that's a bunch of baloney because these patterns give you clues. Now, you could be off, like these are monthly candlesticks. You might be off by a few months or so, but you can see these clusters right here within a 6-month period of time. Within a 6-month period of time, there's warning signs when price gets very far away that it might want to reverse and come back down. And that's where if you're risky and you have your retirement savings very risky at tops, this is when drastic falls many a times happen. So I'd say the most important question that you could ask your financial advisor throughout the process is, can they read a stock chart? If they cannot read a stock chart, I highly advise you going and looking for an advisor that will manage your account that knows how to read stock charts, and will they proactively move your funds too, right? These candlestick patterns, they don't lie. They tell a very important story. But sadly, again, you'll find a lot in the industry that a lot of advisors, especially these big brokers that are reps that manage funds, retirement funds through your company. Again, I'm not going to name the companies, but you'll find many of those reps don't know how to read this. And again, just, the numbers don't lie. If you're risky at a top and it drops really far down like this, you could lose a ton of money. And I say, I kind of present this to people. Would your life be better or worse, when you lose 30% in your retirement account, right? Unless you're a crazy person, your life is going to be worse losing that amount of money. You're not going to feel better when you lose that type of money. And it's very simple. Once you learn stock charts or you have the right advisor that can manage your account, then you won't take these big drops, or you'll be less likely to take them. You might give up some profits along the way. Maybe you go safe, for a period of time too soon and give up some profits. But then what might happen is, you would, by doing that, you also protecting yourself, you would avoid some of these huge drops. So when price is like way overextended out here, maybe you would have been, safer out here. And then you're like, darn, I missed out on some of these gains, right? Because you see price is overextended. It goes up another 2 months. You can kick yourself. But guess what would have happened? You would have sold, or you've been safer up here. And guess what? You know what? You missed those 2 months of gains. But you know what didn't happen? You didn't get this, right? You didn't get these big drops. This is why candlestick patterns and charts are so important. So when hunting for a financial advisor, again, we're huge fans of financial advisors. They do make money like any business. They should make money with managing your funds and all of that stuff. But if they can't read stock charts, find a new advisor. So hopefully this video helped you, and we'll see you in our trading community. Enjoy.